in the 21st century. Hard-working people working hard for you and me. Moving higher, time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast Markets. This edition of the Moving Iron Podcast is brought to you by Dawsontire and Will, your premier ag tire and wheel provider in North America, helping people grow. Tractorzoom, delivering insights, and Dryshod boots, the official work boot of the Moving Iron Podcast. This edition, I have Shawn Hackett from Hackett Financial in Boca Raton, Florida, here with me today to talk about what's going on in the markets. And we've been fortunate the whole time we're doing this, Shawn. There's always been plenty of stuff to talk about. And this week's weather has been a high spot in the news. So I guess as you take a look out what's going on around you, talk about how the weather's affecting the market. We've had a pretty good run up here that at the end of Friday last week, kind of moving into the first part of the week. Saw a little downward spiral here early this week, but it's starting to kind of make its way back up. So I guess when you see the weather forecast of 100 plus degrees and a lot of key growing areas coming into pollination, what's your thoughts on the corn market right now?
I mean, this is something we talked on your program a month ago. We talked about July is going to be super hot, that we were going to be looking at more of a hot, dry summer. Many months ago, we talked about how this was not going to be anything like the last 2 or 3 years that we've been having because it's a pre-La Nina year. So, and we warned about the hot, warm, humid nights, especially in the eastern corn belt, and we're having dew points in the upper 70s. Some places have higher dew points than South Florida, if you can believe that. So you have warm, hot nights, hot, dry days in the western corn belt. Just is not going to allow pollination to go perfectly. And the market a few weeks back, as you know, was trading. Everything's going to be perfect, and we said it over and over again that they start every season the same way. It's all going to be perfect, and it almost never quite turns out that way. And so now we have a situation where the market realizes it's not going to be perfect, and now we're just trying to decide how imperfect it's going to be. We've suggested that we are looking at something like 3 to 5 bushel to the acre below trend. Take in 5 million less planted acres, which we learned at the end of June, and some better demand, and you get yourself very quickly back to a 1.8 billion bushel carryout from 3.3. And while that's not, $7 corn, it's certainly not low $3 corn. It's closer to $4 corn. I think I think that market in corn is now repricing to that reality. And, whether it goes beyond the 380 or 4, which has been that happy place that the corn markets like to have been at for a long time, it just depends on our look at the weather suggests that it's going to be good enough to avoid the catastrophe, like we think it's going to happen in 21, 22, but bad enough that it's going to avoid the perfect scenario. And so it means better prices for farmers, not the best, but a whole lot better than sub $3 cash corn that we were staring at a few weeks back. So
yeah, it's no doubt about that. It's been I was looking at some cash prices yesterday, and they're 279, 280, and that's nobody can make that work. So hopefully this will kind of turn the tide a little bit. So let's bounce over and talk about soybeans. So that last report that came out last week also showed that there's about 2 million less acres of soybeans got planted than predicted. And the kind of the same situation with the heat that we see here. This is not the best possible time for a bunch of heat to be dropping down on dry weather too, dropping down on the soybeans. So I guess as you look at the soybean market, what do you see happening there?
Mark, we're really get excited about soybeans if this weather were to continue in the first half of August. That's really the killer time for soybeans. I mean, it's not that high heat. It's great for July, but it could recover. It can't recover if it's like this in August. So the forecast 2 weeks from now, will be very important because we didn't add those 2 extra million acres that everybody thought. You throw a couple of bushel to the acre below trend, and our carryouts in soybeans, could be sub 300 million bushels, and that is the lowest we've seen in 10 years. So soybean fundamentals. And then you look out ahead and you look at how the hog herd in Asia is starting to really rebound and how much bean meal they're going to need to feed all those animals that they're going to be growing and and developing here over the next couple of years. And so the soybean market can ill afford a hot, dry August. We're not sure we're going to get that, Casey. We think it's possible that we could get a little cooler weather in the first part of August. But we think there'll be enough concern and enough damage done that the soybean market's going to stay well supported. We actually think, I don't know if you've been following this, but we've been seeing some biblical floods in China here in the last few weeks. I mean, just unbelievable. We actually haven't seen rainfall this high since the 1930s, just to give you an example. And so if you look at where soybeans are grown, half the soybeans, usually good rain is a good thing for soybeans this time of the year, but not floods. And so it looks to us that half the crop is underwater. It's going to stay underwater, and that means that the soybean crop is going to be way, way below expectation there. And that means whatever they were going to buy from us as part of a phase one trade deal or whatever they would normally, they're going to need a whole lot more. And so we think they're going to be huge. They've been buying here the last couple of weeks out of nowhere, as you know. And we think there could be more to it than just satisfying the phase one trade deal. We think they actually are doing it because they need it.
Right.
And so that's another thing. We also saw that the USDA is talking about how the fall armyworm is everywhere. They just came out with a report, I think it was a week and a half ago, that suggested that crop yields in corn just on the fall armyworm alone could be down 5%. Corn prices in China have gone parabolic the last couple of weeks as they're running shortages. It looks to me like they're in big trouble, and they don't really have anyone else that they can buy from. And so I'm pretty optimistic that they may be really, really big buyers here later this summer based upon that. And throw in this weather, lower acres and all, we could get this market move that we have seen. We have much longer legs than many believe. One thing I will say, we follow smart money capital flows in grain markets very closely. The one thing that we look for on an initial rally is how much has the smart money been selling the initial rally. They sold very, very little corn on this initial rally, very little. We're still in a buy signal, right? Even after the rally, we're still in a smart money buy signal. That's very telling that they do not believe that the current move is a flash in the pan. They did this last year too, by the way, in May. They didn't sell that initial rally, and it was suggesting a much more protracted rise in price. Now, the prior few years, that first rally, they just hammered sales and said, sell while you still can. So I'm optimistic, Casey, that, at least in the corn market, and of course, if corn goes up, soybeans go up. Of course, the wheat market had a big explosion in price yesterday, and we have very, very strong smart money buy signals in wheat. Wheat and corn like to go together. Says to me, we're in an up move that we've been talking about in your program for weeks and months, that we're actually in a move, and now we just have to try to determine how far they'll take it and how long it will last. But we certainly don't think it's over yet, and we think, as much as there's a temptation to want to sell, and don't get me wrong, if you have to sell, if you got bills to pay, you got to do what you have to do. But we'd be a little, we'd be a little patient here. We'd let this market run. We think we never should have fallen. The pandemic caused prices to fall further than they ever should have fallen. And all we're doing now is getting back to normalcy. And we think being patient will pay off for producers right now.
Yep. Okay, so let's talk about the desert locust situation over in India and surrounding areas there. I've kind of sort of been following that a little bit, not too in depth, but what I have followed is that situation is just getting worse by the day. And talk about key growing areas for sugarcane and some cotton, and they're getting devastated right now. So talk about what you see happening in the cotton sugarcane market based on what's happening in Southern Asia and in India.
Well, we have to understand there's waves of reproduction in these desert locusts. So they lay a bunch of eggs. So they had a spring egg laying fiasco that is leading to the current surge in India, okay? And it's in India now. It's there in provinces. We're seeing pictures. We're seeing videos. It's already there. I mean, it's not like we have to guess now. Is it going to be? It's there. Having said that, The much bigger surge is the summer egg laying that has taken place, because during the summer, the monsoon season, bugs love rainfall and moisture and humidity. And so this is when they actually produce far, far more. Those eggs have been laid, the die has been cast, and the summer surge, Casey, is going to occur as we move into the end of July and into the month of August. So what we're seeing now already from the spring surge is going to be at least an order of magnitude worse in August. And that does mean that the cotton crops, the sugar crops, the rice crops are going to be in a heap of trouble to try to produce yields like everyone is anticipating. And so we think and continue to believe that this is going to be a large impact to the market in August and beyond, as the market has to dial down production in a key exporting country like India. So it's real, and it's a major event that's going to dovetail with what's going on with U.S. weather right now.
Okay, so let's bounce over and talk about wheat for a minute. Here we are in the right in the middle of wheat harvest. It's basically halfway through the overall wheat harvest in the United States, and we are seeing a lot of moves in wheat that you wouldn't typically see right now, based on harvest pressure and those kind of things. So talk about the wheat market you see happening now and some of the positive things happening there.
Well, with winter wheat, CBOT wheat, KC wheat, we had harvest pressure. We get it every year. June is a typical period where farmers sell off the combine. They got to sell. They got to pay bills. Well, usually once you get about half harvested, there's a normal bounce to the market. Remember, the global pandemic has caused a surge for two must-have ag food items. That is rice and high-quality wheat for human consumption. And that hoarding mentality, or that demand globally, especially in Asia, for those two products is not gone away. It's, in fact, it's accelerating. We have plenty of what we call low-quality wheat in the world, but we have a shortage of high-quality wheat in the world. And so now that this harvest pressure in the U.S. is over, and by the way, what we're also starting to see is, as the harvest is getting further north, a lot of the frost that we got into those northern winter wheat belts are showing much lower yields. A lot of the dryness that we saw in those northern regions are showing much lower yields. And so the yields are starting to come in far, far below what many had anticipated in these areas. And so the USDA is too high in their winter wheat production. They're going to have to come down, not only in this report that's coming out tomorrow, but also in the future, in the next report. And I think the market yesterday finally figured out, A, there's a shortage of high-quality wheat, and B, yes, that adverse weather had a much greater impact than we thought. And by the way, prices are too low. We need to start, getting our wheat needs fed. And so that's, and we had a really outstanding smart money buy signal in KC winter wheat. So looks to me like the harvest lows are in, and should have we think, quite a spirited post-harvest rally here that producers can, look for to have a better price and to make some good sales once this gets further along. Once again, like corn, we think patience will be a virtue here for a little while.
Yep. But they're still getting quite a lot of pressure on wheat too from Ukraine and Russia. It looks like they had their forecast lowered over the yesterday afternoon, and which sparked some trading as well.
The Russian wheat crop is not delivering again. Remember, it was just 4 years ago, when they had more than tripled their wheat production. They were going to go on to 120 million metric tons of production. Nothing can stop them. And then 3 years ago, they went from 88 million down to 70. Well, now the next year we're going back. Here we go, 72. This year we're going to come back. We're going to have this big crop, 75, and on its way to 72. It looks to me like we keep lowering the crop yields, like you said. The weather has changed, and they're just not able to deliver on expectations for 3 years in a row, and we haven't even gotten to the bad weather crop years yet. 21-22 is going to be really, really unfavorable for Russia, like it was in 2010, 11, 12. So the story here, Casey, is that this grand solar cycle weather change in the weather patterns that we've been talking about, this just getting started, is starting to have an impact on stunting global production in grains. And according to our work, as you know, the La Nina in 21-22 is really going to put that concept to the real test. And so we expect that this is going to be an ongoing thing, and the market's going to have to start dialing in that Russia is not going to be increasing production. In fact, the production there is going to continue to fall, and that is a big, big change in a country that's become the largest exporter in the world. So,
yeah. Okay, so the other thing too, based on the heat that we see happen right now, it is scorching hot in West Texas right now. You're talking like, I think the 10-day forecast I was looking at down the other day was, I think the coolest day was 102. So it's 109, 107 degree heat. Couple that with the last week's report on, again, cotton acres fell, just like everybody else's acres did, and looks like the traders are looking for ending stocks to fall about 1.1 million bales from 8 million projected that they saw in June. So when you look at what's going on in the cotton market, and it's devastatingly smashed in the face that thing got with the pandemic and the stuff we saw happening there. There looks like to be a little bit of light at the end of the tunnel.
Well, look, the market has rallied substantially off of the lows, pandemic lows, because demand's come back somewhat, and of course the weather. Remember, we lost 8%. The acreage was 8% below what was expected in the U.S. I mean, that's a big miss. That's a big miss. And then you talked about West Texas, right? If you draw a line straight down the center of Texas, Eastern Cotton Belt have a lot of irrigation. They can get by to some extent. The Western Texas Cotton Belt is not irrigated. It's dry land. Either they get the rain or they don't get the rain. They don't get the rain. They have not been getting the rain, and you get 100-degree heat. They can actually have zero production on fields there. I mean, you can have a zero crop because there's simply no irrigation and there's no way to. So if you get the right conditions, it's not uncommon for dry land cotton out in West Texas in some areas to have zero. So we're trying to find out how close to zero are we going to get. But to me, the way we're seeing things, remember, we haven't talked about an active hurricane season and what an active hurricane season could mean if you throw, copious amounts of moisture on open bowls in the deep south into Texas. That could be an additional thing we worry about later on in the season. So everything says to me, we are going to have probably one of the smallest cotton crops we have seen in a very, very long time. You might have to go back a decade to see the last time we had a crop this small. So there you have it. There you have it. And if we're talking about a desert locust problem in Gujarat in northwest India, who's one of the top growers and exporters in the world, also having trouble, you just have yourself one heck of a supply side problem. And look, demand's not great, but it's better than it was. And it's certainly better than it could have been. And so you throw that in there, and cotton looks like it will continue to work higher until they can put to rest what the hurricane season is going to look like. And so that market continues to have a steady beat drum higher after those, those lows that we saw under 50 cents. We're now in the mid-60s. It's a big move. Still not the very, very best prices, but they're starting to get to a place where a guy can pencil out paying his bills. So,
yep. And that's the important part of that equation. Okay, jump over and look at this protein. So we got hogs and cattle both finished down pretty good yesterday. But they're still hovering around that mid-90s. There were some $100 bids in Iowa in the cattle market. So I guess let's talk about the cattle market. What do you see happening there? I mean, it feels like we're back to pretty much normal on the slaughter side. It feels like demand's there. I guess where's the hang up?
Well, I think we have to separate the beef price from the cattle price. We know the beef price went to all-time record highs of all time, never seen before in the history of our country for a while. That did hurt domestic demand for beef, and it did hurt exports for beef. Also, due to the fact that we had packing plants for a while that were not being able to bring animals through, what does a cattle producer do? He fattens them up some more and increases the weights, and so we're having weights probably 5% above year over year, which means every animal's got a little more meat. when you bring it through. And so there's some headwinds there. I mean, not bearish. It just slows the rally from what it could have been because we have so now the beef price has fallen back down. Okay, the beef price has come back down significantly, and that's going to start the process of getting domestic demand and export demand going. But we still have to contend with those higher weights. So it's a market we think will work higher, but we don't think we have the explosive potential in it at the moment. We think the explosive potential is the hog market right now, because in the hog market, you don't put hogs on pasture and fatten them up. You euthanize them if you can't bring them to market. And the price got crushed so bad, into the 40s, that fallow wings, if you looked at the Hogs and Pigs report from a couple of weeks back, fallow wings in the summer and the fall are going to drop the most in 20 years. So we're looking at a supply vacuum in the fall and into the first quarter of 2021 at a time where export demand from China is all-time record. And because beef prices got high, people switched over to pork, and pork demand domestically is really, really strong. And the packing plants are getting their act together and starting to move the pigs through. Weights are flat to down from a year ago. So we're not having this headwind of having higher weights per head. So everything says to us that once we get through a little more of this overhead oversupply in the near term, hogs have, we think, an exciting potential price rebound here in the fall and into the first quarter. And so we've got a very, very strong smart money buy signal, a big buy bar this past week. So everything looks really solid to us. That if we're looking at livestock, we already talked about, a couple weeks back about the milk market had one of its biggest surges ever. The cattle market had a pretty good surge, but the hog market has not had a surge yet. We think it's time for the hog market to play catch up to the rest of the livestock group. And so we would be focusing, for cash buyers of hogs, we would be certainly wanting to make sure we got some business done, because we think these prices are not likely to last much longer for cash buyers. So,
yeah, right on. Well, good stuff as usual, Shawn. If folks want to reach out to you and ask you questions about what's going on or how you can help them market their products, what's the best way to do that?
Our website is Hackett, Hackett, advisors.com. All kinds of information on there. See how we do things, and to see if what we do might help them, with their marketing and with their hedging needs.
Right on. Well, I am Casey Seymour with Moving Iron Podcast. I'd like to thank Shawn for being on this edition. Make sure you check out the Moving Iron LLC Facebook, Twitter, and Instagram page for all the latest information about Moving Iron Podcast and also the podcasts that get posted there. Also, check out movingironllc.com for the latest information on the Moving Iron Summit. That is September 1st through 3rd in Nashville, Tennessee. Shawn will be a speaker there. Always great information as well. Also, check out the Global Ag Network and the great podcasters out there. And with that, I am Casey Seymour with Shawn Hackett. Let's go move some iron, folks. Out.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here.